Hello, it's 10 o'clock on the 2nd of August. My name is Jonathan Greenstein and welcome to today's webinar, Implementing Vulnerable Customers Policies and Processes that Work, jointly hosted by ComplyPort and the London Governance and Compliance Academy, LGCA. Today's presentation will be presented by Peter Wilson, a manager here in ComplyPort. Peter has joined ComplyPort after 10 years of holding compliance officers and MLRO positions within a number of FCA regulated companies throughout the investment management, foreign exchange, CFD, e-commerce and insurance sectors. He has a deep understanding and overseeing key regulatory projects including CAS, MiFID, MiFIA, EMIR, AML, SMNCR, conduct and culture, vulnerable customers and complaints. In one recent case, Pete has managed an EMI application and had to answer questions from the FCA on vulnerable customers, as well as the steps that the firm was proposing to take. Now, before we begin, I would like to cover off some brief housekeeping points. Either at the top or bottom of your screen, depending on how you have it configured, you will see a button called Q&A. If you have any questions, please ask them in there, and we'll try to get through them as many as we can. Of them at the end of today's discussion. Please do not post any questions into the chat function, as this will not be monitored. The topic of vulnerability and identification and management of vulnerable customers is a persistent issue that gets additional regulator focus each year. Vulnerability can arise from a number of internal and external factors. For example, individuals could be subject to some form of recent distress, such as a bereavement, divorce, or having lost their jobs. And then there are those who might be vulnerable by virtue of their mental incapacity, addiction, or limited financial capacity. In the FCA's Financial Lives 2020 survey, published in February this year, they stated that between March and October 2020, the number of adults with characteristics of vulnerability increased by 3.7 million to 27.7 million. The FCA has also stated that they want to see the fair treatment of vulnerable customers embedded as part of a healthy culture throughout firms, not just on the front lines. This would also include areas such as product development. At the very least, the FCA will be looking for firms to ensure the following 4 points are incorporated into a vulnerable customers policy. Understanding the needs of the customer base, ensuring your staff have the competencies to recognize a vulnerable customer and respond to their needs appropriately. Keep vulnerability in mind during product design and customer communications, and a focused, regular monitoring and review process. Now, before passing the microphone across to Peter, we have a couple of polls to gauge your firm's approach to vulnerable customers. I'm going to launch the polls now. If you could please answer them. The first poll, make it wide here. How would you rate your company's approach to vulnerable customers? I'll give everyone a few more moments to respond. Just 10 more seconds. Fantastic. So we'll end the poll there and we'll display the results. So you can see on the results here that most people would say that their business is very good or average, which is actually very good to see. What we'll do now as well, we'll stop sharing. So I've got two more very quick polls. So here's the second one. We'll launch it now. The poll is, how would you rate your firm's vulnerable customers policy? I'm just getting the answers coming in now. We'll give it a few more moments before we publish them for everyone to see. And following this poll, we have one more, and then I'll be passing across to Peter. So let's end the poll here and share the results. So again, in regards to looking at a firm's vulnerable customers policy, again, the vast majority, 46%, have said very good, with 41% saying average. So it is very pleasing to see this among firms. So let's move on to the final poll. Bear with me 2 seconds. And the final poll is, and we're launching it now, how would you rate your colleagues' training on vulnerable customers? And we'll give it another 10 or so seconds, wait for a few more answers to come through. And we'll end it there and we'll share the results. So whereas the other ones had either a very good and average being equal or very good being the majority, this one actually says that most people would say that their colleagues' training is average. 45%, 29% said very good, but 16%, third highest, said their colleagues' training is not good on vulnerable customers. So thank you very much for sharing that with us. With all this in mind, I'd like to invite my colleague Peter Wilson to please now unmute his microphone to talk to us about vulnerable customers, the FCA's concerns, and the frameworks that can be put in place. Peter?
Thank you, Johnny. Thank you for the introduction and thank you for the survey. It's very, very interesting. Good morning to everybody on the webinar. Thank you for joining us so early in the morning. I'm going to talk about vulnerable customers, which has become a very hot regulatory subject. The FCA have indicated in the strongest terms that firms should address the issues surrounding the identification and treatment of customers who are vulnerable. In February this year, the FCA issued their finalised guidance, FG 21-1, guidance for firms on the fair treatment of vulnerable customers. Some of my slides and graphics have been taken from that report because it's a very, very comprehensive report and guidance. We will look at the definition and background for the FCA's actions in this area. We'll look at the definition of vulnerable customers. We'll look at the issues, the FCA's concerns of why this is such an important area for them. We'll be looking at what the framework will be in terms of managing it and compliance, and we'll draw some conclusions, and we'll also look at the future and what's likely to happen. So next slide. Thank you, Johnny. The FCA's definition. The FCA's definition of vulnerability refers to customers who, due to their personal circumstances, are especially susceptible to harm, particularly when a firm is not acting with appropriate levels of care. Firms should think about vulnerability as a spectrum of risk. All customers are at risk of becoming vulnerable, and this risk is increased by characteristics of vulnerability related to 4 key drivers. We'll talk about the drivers, but they are health, life events, resilience, and capability. And as I said, we'll look at that a bit more in depth in a second. Next slide, please. So this slide was taken from a BBC website which drew the figures from the FCA's Financial Lives Survey, which was issued in February 2021. The figures are in millions, not pounds million. I apologise, the graphic's slightly wrong. 20 million say their overall financial situation is a lot worse than the previous year. There's been nearly 19 million people who've received a scam approach, whether that's a phone call, email, or a letter. Nearly 10 million have seen their unsecured debt increase since February last year. 9.8 million have cut back on essentials like food and clothing. Nearly 6 million have borrowed for friends or family. 3 million mortgage holders have taken a payment holiday or deferral on their mortgage, and 2.1 million self-employed adults have seen their income fall. So the Financial Life Survey has shown that COVID has hit people hard, but some of these issues are longer term, and we'll talk about that in a second. Next slide. So behind the FCA's focus, there's obviously an uncertain economic outlook, COVID, Brexit, and the such like. There's been an adverse hit on what the FCA have called young purchasers, and I think that runs up to 18 to 40. There's an aging population, the COVID pandemic, and also for the FCA, they've had some poor outcomes on PPI, payday lenders on Wonga where they've had to intervene. And there's also been a debate in Parliament about the pay later providers, such as Klarna, where the interest-free period suddenly runs out and consumers find that they have an awful large sum to pay once the interest-free period has run out. Next slide, please. So, from the FCA's business plan, which was issued last month, the FCA have talked about the number of adults with low financial resilience has increased by 3.5 million to 14.2 million. And as Johnny said in his introduction, that's 27% of UK adults. That's a substantial number of people. So the FCA are aiming to improve the firm's conduct where consumers are informed and empowered to choose the right products and services for them at the right price. I've seen this in the CFD industry where they've talked about it. The firms are in a position of information power, the asymmetric side of things where firms have more knowledge than their customers. And this looks like it's going to become a theme for the FCA as well. And the second part, Johnny, the FCA are planning to intervene in financial promotions. So that means that they're going to be more interventionist in stopping misleading promotions, which have seen the FCA invest up to, I think, £100 million to pick up misleading adverts on the internet, on the web, and elsewhere. And these are adverts which are not true and are misleading. And the FCA are going to be more interventionist than they've been before. They're also going to campaign to inform consumers about high-risk investments, what is and isn't protected. So you've seen quite a large discussion about the FCA's perimeter, where they can act or where they can't act. And in particular, we've seen a growth in the crypto industry where over 2 million investors have invested in a sector which is not protected at the moment. And in terms of the consumer investment strategy, the buy now later Klarna type products will also be subject to more intrusive regulatory intervention. So the consumer investments paper next year will likely be introducing further powers for the FCA to intervene and protect customers. And that's retail customers, and in particular, they'll be addressing the vulnerable customers. Next slide, please. Just talking around the wider factors, the growth of cryptocurrency investments, as I said, that's now over 2 million investors, primarily younger people. The alternative payment models, e.g. Klarna, where 3 month, 6 month, 9 month deferral periods run out and people find that they have a high amount of debt, and that's being discussed in Parliament, which is bringing into light the FCA's requirement to act. The FCA, during the London and Capital mini bonds period, failed to act as it should do. Whether the products were within their perimeter, the firm was regulated, and the FCA has been subject to quite severe government scrutiny and criticism. And finally, we're seeing a huge growth of new firms, the fintechs, which are re-engineering the traditional financial services, banking, lending, borrowing, and credit cards, etc. So where I've seen it of the fintechs applications, and I sat on an application, the FCA are asking questions before firms are regulated, during the discussion before approval, about how they are planning to deal with vulnerable customers. And they are difficult questions. They're asking to see the policies and how have firms considered how to protect vulnerable customers, and internally, what steps have we taken to manage and to look after them, and how you identify them. Next slide, please. So coming back to the FCA's 4 key drivers, the FCA have identified 4, and this is health conditions or illnesses that affect the ability to carry out day-to-day tasks. These can be both physical and mental health conditions. Life events, such as bereavement, job loss, or relationship breakdown. Resilience, low ability to withstand financial or emotional shocks. Capability, low knowledge of financial matters or low confidence in managing money, their financial capability, and low capability in other relevant areas such as literacy or digital skills. Not everybody does have access to the internet, and not everybody can understand the complexity of particular products. Next slide, please. Again, this is taken from the guidance paper in February. So splitting them down, there's a range of issues which the FCA have found. So under health, you've got physical disability, mental health conditions or disability, addiction, low mental capacity or cognitive disability, life events, retirement, bereavement, resilience, inadequate outgoings exceeding income or erratic income. So we've had a debate before COVID of the gig economy. So this is something that the FCA are aware of and are highlighting. Over indebtedness, low savings, and incapability, no knowledge or competence in managing finances. So the FCA estimates, as we talked about, 27.7 million adults in the UK with characteristics of vulnerability, which fit into any of these 4 categories. So for example, looking at health, just taking one of the cases here, the financial ombudsman found against an insurance company where an insured customer, because of illness, was in hospital for a month or so, and they'd asked their son or daughter to go and visit the house regularly, and during this period the house was burgled. The insurance company wouldn't pay out because obviously the house was not occupied, but in this case FOS found in favour of the individual. I like to talk about bereavement as a life event where a widow or a widower may not know how to find their way around the financial services system or how to deal with their partner's policies and investments. This is always going to be an issue and for financial service firms, and you've obviously got processes and procedures in place to do so, or should have. But imagine if that bereaved person who'd been dealing with you had lost the documents, had them stolen. How would you help them? How can you help to reduce their distress? Resilience. Once upon a time, and it doesn't seem so long ago, there was a view that anybody in work should have 3 months' salary in the bank in case of an emergency, in case their job went. And that maxim doesn't exist really for the majority of the population or a significant part of the population who may have little or no savings. The FCA's Financial Life Survey, as we mentioned earlier, estimated that 14.2 million UK adults had low financial resilience as of February 2021. That's an astounding number. And finally, in regards to capability, just picking on language, can you communicate with your clients in their language? And are you able to provide service at times which is convenient to them? Remember, the 1 o'clock or the 12 o'clock lunchtime phone call period is usually blocked up and people can't get through. Have you got times after normal working hours where people can contact you? Can people contact you via email or otherwise, or on your website? And finally, are your policies and terms and conditions written in easily understood language? Often the FCA do pick up the fact that the language on these policies is not understandable to many customers. Can we move on? Next slide, please. So types of vulnerable clients. This was picked up from the BBC webpage in March, which was based on the Financial Life Survey. 11 million UK adults had low financial resilience pre-COVID, so that's obviously grown with COVID. Many could not cope with a financial shock as £50 a month cut in their income, so basically they're running very close to the breadline or financial distress. And the figures would indicate that disproportionately they would tend to be people who are unemployed, which is pretty obvious because the income would be lower. They were renters, they were female, and they were from the BAME communities. Next slide, please. So the FCA have taken action in 2020 against 3 firms where vulnerable customers was a feature. So Moneybarn were fined £2.7 million for breaches of Principle 6, Principle 7, and the Code of Conduct rules related to the unfair treatment of customers in the consumer credit sector. Lloyds Bank were fined £64 million, and it relates to the breaches of Principle 3 and Principle 6, and that related to the unfair treatment of customers in the mortgages sector. And finally, Barclays Bank were fined £26 million for breaches of Principle 6, Principle 3, and the Code of Conduct in relation to the unfair treatment of customers in the retail banking sector. So we started to see the FCA to use their powers and to mention the unfair treatment of customers who are vulnerable. Next slide, please. So one of the issues is how do you refer to vulnerable customers? And I'm going to be honest here, I haven't got the perfect answer here. Do customers want to be known as vulnerable? 9 times out of 10, or a significant number, probably don't want to be called vulnerable. It's a temporary in most cases, and being classified as vulnerable, they might see as a stigma. So what language do we use here? Something like financially distressed or distressed, or temporarily incapacitated if they've got an illness or the such like. So rather than worrying about causing offence to customers, how are you thinking about to be more inclusive and building bridges? So if your vulnerable customers are from a community or are young or old or another characteristic, have you got the people on your client service teams or within your client contact teams who can speak in their language, who can understand what they're talking about without being patronizing and can relate to the issues which are being raised? Next slide, please. So what does a vulnerable customer framework look like? The framework for dealing with the customers should be dynamic, and it should be updated and amended on a regular basis, and it should be appropriate for your firm. So just going through a few of the points I'm trying to make here. Policy and procedures. Has your firm got a current policy, and how do you make it work within your firm? For example, we've been working with firms and have helped to update our vulnerable customer policy over the last few months and made that available. There has certainly been a demand from our customers to see that, our clients to see that. Within your organization, does it fall under compliance? And if so, how does your compliance team ensure that you have the correct policy and procedures for your firm? And surely it's one issue which does cut across the whole firm. So how does it impact upon your sales teams, your client services, your product development teams, the risk team, operations, and your corporate governance? I would suggest it crosses all of them. How do you identify and assess whether you've picked up vulnerable customers within the company? So do you monitor your phone calls for vulnerability, your emails and other correspondence? And in an extreme case, what would happen if, say, a client's lawyer or an MP or a local politician intervened on behalf of one of your clients? What would you do? How would you learn from that process? Management information, which we will talk about a bit later. But what metrics do you capture to record vulnerable customers, and how, whether their issues have been resolved or whether they were vulnerable and no longer vulnerable? Mitigation and remediation. How would you help a client if they said, I can't afford a £20 a month repayment on my credit card, I can only afford £10, as they've lost their job? Would you be able to help them out there Is there anyone they can talk to? Is there a policy whereby you don't immediately increase the payment if they default? So that's an area which needs thinking about. And finally, in regards to this slide, resourcing and change. Do you need to have a specialist team in-house which deals with vulnerable customers? Or can you provide the training to your client-facing service teams to spot vulnerable clients? And does your firm way of doing business need to change if the number of vulnerable clients poses a regulatory risk to the firm and complaints are being escalated to FOS, for example? Some things to think about. Next slide, please. So steps to take. As I mentioned, we've recently been working on updating our vulnerable customer policy, which is being used by our clients. We've seen a demand for our clients to help develop a vulnerable customer policy and to assist in terms of building a framework which deals with vulnerable customers, which I discussed in the previous slide. But one thing that is very important for all firms, each firm would need to tailor its provisions to its own clients. So some firms will have a large number of potential vulnerable clients and others a handful. So it depends on the type of products you're marketing. So money bond, which was enforced against, was tending to provide loans to people in financial distress. So they would tend to have a higher number of vulnerable customers, for example. And where you have dealt with vulnerable customers, how can you learn as an organization? What was successful? What failed? What will be your continual learning process? And where I'm talking about a virtuous loop back is if you've learned lessons, how can you improve how you deal with vulnerable customers going forward? Next slide, please. Key areas, obviously, are where you have client contact points, which will be onboarding and ongoing monitoring. So have you reviewed your customer onboarding processes and ongoing monitoring of clients? When do you talk to clients? So are there times where talking about a client lifetime model that you talk to clients and know that they might be vulnerable? If so, how can you help or mitigate the vulnerability? And we're going to talk about this. How do you record vulnerability on your systems? So when you design your products, are you ensuring them that they don't go to vulnerable clients, i.e. engineering them out at the design stage of products? And from a GDPR perspective of data protection, if you are recording sensitive information on your CRM systems, how long do you aim to keep it and who should see it? So some client information is extremely sensitive. So if somebody has a very severe illness, for example, which members of staff should be able to access that information? And should it be senior staff or a manager who can only see the particular flagged record or the information on the flagged record? One question I got in advance of this webinar is that if a client doesn't want to be recorded as vulnerable, which is a fair enough request from a client, how do you internally advise your client service manager or teams of the issue of this vulnerability? And where do you have a policy of deleting this information from your CRM file? It's something which firms will have to get used to, because we all have to get used to the fact that vulnerability might be temporary, and clients obviously don't want to be regarded long-term as vulnerable or even short-term as vulnerable. Next slide, please. So we've seen moves in the past by the FCA about culture and a positive organizational culture. And this is one area for vulnerable clients or vulnerable customers, which is going to be something which indicates whether you've got a positive culture. So looking at it, do your staff in your organization know who is responsible for vulnerable customers? Is there an escalation process? And have they been trained to the company's policy and procedures? So, for example, in terms of culture, is within the organisation a policy of being open to speaking up and discussing the issues? Are all levels of staff aware of vulnerable customers? So senior staff from the board level down, how do they get involved, or should they be involved in helping to address the issues around vulnerable customers? The middle management teams likewise, and your junior and client-facing staff, how are they trained? And is there a feedback loop for the issues which are dealt with and identified within your firm? And finally, do your staff feel empowered to recognise or resolve vulnerable client issues which are raised during their lifetime with the firm? Next slide, please. Training and support. I'm sorry, this is a bit busy here. It's essentially, how do you train your staff to identify and have the information they require to spot and support vulnerable clients? So for instance, life events, employment changes, issues that make a client financially vulnerable. So when you train your staff to spot vulnerable clients, how do you enable and empower your staff to take steps to escalate or deal with themselves? And something which comes out of dealing with vulnerable clients, it might actually be emotionally exhausting and taxing for your staff. So how do you support your staff who too could become vulnerable, and you give them the time and space to deal with the problems they're dealing with on a regular basis? So for instance, it could be time off. It could be a room away from the phones or the emails where they can wind down after a difficult client discussion or meeting or an encounter. And just remember, it's not just your customers' health which is important, your staff's health is also important as well. So part of the positive culture will be looking holistically at who's dealing with the issues and are we looking after them as well. Next slide, please. So we'll talk a bit about metrics and are we catching the right metrics? So we look at complaints, forbearance, credit repayment, holidays, declinatures, and how many clients have taken a COVID payment deferral. So getting back to the data protections issues, should the very sensitive information be disclosed internally? And should there be flags on client files to tell staff to refer to the appropriate team in-house or a senior manager? And finally, in terms of this, the right metrics, where is it recorded where clients are trying to negotiate with the firm for forbearance about the amount they can afford to repay? And not wishing to be patronizing here, I looked up forbearance to give you a definition from Investopedia. Forbearance is a temporary postponement of loan repayments, typically for a mortgage or student loan. Lenders and other creditors grant forbearance as an alternative to forcing a property into foreclosure or leading the borrower to default on their loan. So it's an important part of what we're facing now during the COVID period. How do you make sure that we can manage and retain our clients without adding to their distress? So moving on to the next slide. Management information. So again, how are we recording complaints? Are some of these complaints related to vulnerable customers? Defaulters, is this again related to vulnerable customers, debtors? And what are the total numbers of vulnerable customers we've identified, and how many have we helped to resolve or drop off this month or during the course of a year? So every firm that deals with retail customers will need to take the steps to capture the management information necessary for that firm to manage their vulnerable customers. Unfortunately, there's no silver bullet. So you as firms will need to identify the right information that you need to manage vulnerable customers. As I said, some of the indications could be complaints. Is there a common pattern to your complaints? For example, clients might come back and say, I was unable to adjust my payment period or a figure to repay due to losing my job. I was unable to reach somebody within the firm who I could talk to. Defaulters. Are they provided with repayment options? Is there somewhere where they can escalate the problem? Who are the right people involved in the decision-making process? Should it be frontline staff, or is it escalated to management immediately? And debtors, how can the firm help them? Or should they help them where they're financially stretched? Can they give advice themselves, or can you introduce them to a charitable partner or a third party that you can recommend who deals with their particular issues and are known to be helpful to get them through a difficult period? And finally, is the information that we hold being escalated to the board or the relevant client service teams so that we know the extent of the problem and how well the firm we are doing to address the issue? And at the top level, the ExCo, the board, are they actively involved in helping to shape the policy and processes based on the information they receive? So if the regulator was to knock on the door, would your board be comfortable talking with the regulator and saying, we've dealt with X amount of vulnerable customers, we've got a policy, we've got procedures, and we check them on a regular basis? Next slide, please. So other considerations around your framework: do you get it audited in terms of how you're dealing with vulnerable customers, either internally or externally? Do you look at the products that you sell and are they suitable for all the clients? Are you actively making sure that certain groups of clients don't get the products? When you audit, are you doing this internally, or could you use a compliance consultancy like ourselves to come in and see if you're utilizing best practice in this area? Benchmarking. One of the things you should do, if you can do, is to check on a regular basis that how your systems and controls and how you're dealing with vulnerable customers are working in relation or comparison with your competitors. What do our competitors do? Is there something we could copy or introduce for ourselves? Is there industry good practice or something that our membership associations recommend? And one of the things that I did before talking to you today was to look at banks, and banks such as HSBC, Barclays, First Direct have got papers available to read about how they're dealing with vulnerable clients, or research that indicates how they're dealing with vulnerable clients. Target market, and I think this is going to be a very, very big area. It's already popped up in the product governance. Have we properly defined who our target market are, and are our products reaching them? Are they reaching people that they shouldn't be? In which case, this area of negative target market, which has become very key part of the FCA vernacular, are there groups of clients that we don't want or can't support with our products? And how do we ensure that our products don't reach this market? If this product has been taken up by vulnerable customers, what steps are the firm taking to make sure it doesn't happen any further? Can the product be redesigned? And in the worst case scenario, can the product be pulled from the marketplace? So vulnerable customers in this instance can affect the firm in a number of different ways. And it's important the firm takes the right steps to protect itself and its vulnerable customers. Next slide, please. Conclusions. The financial service firms have a choice. And it was great to see the survey earlier. So many of you have implemented a vulnerable customer policy and have procedures. Some of you are obviously looking to upgrade them, in which case, great. It's an ongoing cycle which you obviously need to address. You need to recognize, obviously, that the FCA has issued warnings on its website and in speeches about vulnerable customers, and is planning to take a focus on future regulatory changes that it's planning to bring in. And it's very important to ensure, if you've not already done so, to take steps to become compliant. And as I said, next year, there will be more consumer regulation. Next slide. Okay. The warning signs are out there. Large numbers of young people are in debt. The COVID pandemic is yet to be fully felt. So we do know a large number of people have used up their savings. A large number of people have got their credit cards maxed out. There's an estimate there's now about 1,000 food banks in the UK. There's been approximately 130,000 deaths due to COVID. So that's a huge number of families which have been adversely affected, and that's to feed through, of course. 700,000 people have been pinged, which means they haven't been able to go to work or working remotely. The jobs market is obviously uncertain. And last year, there was a very successful campaign by Marcus Rashford about free school meals. And that wouldn't have been necessary unless it was necessary. So thank you for your time, everyone. Next slide. If you've got any questions, please raise them now, or Johnny will let me know. And thank you for your time. Thank you for listening.
And thank you. Now that concludes the formal presentation section of the webinar. I would now like to open up to our audience, see if anyone has any questions of Peter today. We've already had a couple come in, but what I'll do is I've got one more poll to launch, which I will launch and let people answer it very briefly whilst we wait for a couple more questions to come in. I'll launch that now. I'll give it about 20 seconds or so for people to respond. And then I'll dive into the 3 or 4 questions that we have at the moment. So let's leave this poll running in the background here, and let's ask some of the questions. So Peter, the first question we have is vulnerability the same as treating customers fairly?
That's a good question. The FCA obviously has the 6 principles of treating customers fairly, but I think vulnerable customers is a standalone issue and become increasingly important for the regulator, and will be addressed in future regulatory changes. And of course, we've seen the finalised guidance, which was issued in February this year, where they've obviously issued guidance of the fair treatment of vulnerable customers. So I think you can treat both as separate items, but it is important when you've got retail clients that you do look at how you're treating vulnerable clients in its own right.
Thanks, Peter. Now we've had 2 relatively similar questions. I'll read. I think they're quite similar. So I'll read them both out, and maybe you can provide an answer to both. So first one is, what level of information can be recorded when a customer does not give consent for information to be recorded? The other question is, how should we cope if the customer will not give express consent to share the information with your service provider?
I think these are challenging questions for firms, and I don't think there's a particularly easy answer. If they've not given consent, then it's very difficult for you to escalate it and deal with it. It might be better then to refer it to a senior manager who deals with that particular issue at that point in time. It could be that you might have rules internally that if somebody is not given consent, that you inform either by email or some other way where it can be deleted at a later date. So there are some GDPR issues which we touched upon earlier. It's about finding what works for your organisation. Obviously, smaller organisations possibly lean across the desk, but larger organisations where you've got thousands of employees, how do you escalate this up and how do you deal with it is a more complex question. So I can't give you a specific answer, but it's really for firms themselves to work out what works for them best.
Thanks, Peter. We've had quite a few come in, actually. So in the case of non-advised online insurance sales, what practical examples are there that we can implement to ensure we address the issue of vulnerable customers, whilst also ensuring we do not overcomplicate the online customer journey?
That's an interesting question. My background is in the CFD world, and certainly there are issues about appropriateness. So you would obviously check if their income is sufficient, whether the product is appropriate for them, and issue the appropriate risk warnings. Now, in terms of insurance, I would think certainly any questionnaire when you onboard a client would have things which are similar: age, health, possibly also income. So if it's non-advised, you will still have some information to deem whether this product is appropriate or not. So whether you need to ask additional questions is a moot point. Certainly we've seen some of the engines that we've looked at asking questions about health and vulnerability, both physical and mental. Now, whether you engineer that into your questionnaire, I suppose that's your own choice. However, if you're just looking at reducing the customer journey to a minimum, that's perhaps a higher risk strategy now than it would have been in an earlier period.
Thanks, Peter. So let's move on to the next question now. In terms of the various communications channels for customers, would you look to embed questions about vulnerability within claims forms online? For example, so you would have any communication preferences or circumstances we need to be mindful of when servicing your needs?
I think every good business should look at how it would deal with vulnerable clients. Now, whether that's their preferred method of communication, whether it's perhaps having somebody who can talk the language if English isn't the first language to the customer, are good points. It's about finding out how you can help them as best as possible. So again, talking in the general sense, you want to have your team and your people able to receive client communications in a number of different ways. And again, if there's a preference from a client, can your firm cope with that and provide that facility?
Thank you. What impact is the FCA's consumer duty principle going to have on firms when considering the fair treatment of vulnerable customers?
It's a good question. I think we're going to have to wait to see. Obviously, we're going to start to see the first cases under the SM&CR, which will indicate how that's going to be implemented. And certainly with regards to consumers, the FCA does have a watching brief and as to protect consumers. And as I said, I worked in the CFD industry, and retail customers are given the highest level of protection. So firms should obviously be looking to make sure that retail customers are looked after, they know the risks, and firms are making sure that the products are suitable or appropriate, as the case may be, to their particular financial needs.
Thank you. Is it a formal requirement to record vulnerability, or is using indications, etc., quarter protection, probate system flags, etc., as an indicator suitable?
I think, as I said before, management information is very important here. So do you know the numbers of vulnerable clients on your books? How many have come to you in the last week, last month, last year? How many have you helped resolve? I think it's about finding the right metrics which work for your organization. And certain companies will have higher numbers. And I mentioned Moneybarn earlier, where they are dealing with this particular sector. And don't forget the crash of 2008. Some of us still remember it. It was mortgages to distressed customers who couldn't get mortgages elsewhere. So certain businesses will have more exposure to vulnerable customers than others.
Thank you. Is there a case that we need to categorize all clients as either vulnerable or not vulnerable, or is the onus really on identifying those who are vulnerable?
That's a good question. I mean, in terms of recording it, probably not. I think it's really in the client's hands where they come to you and say, I've had a bereavement, I've had to go to hospital, I've just lost my job. In some cases where it's a product where you're aiming at vulnerable customers, maybe you record what that vulnerability is. So for instance, in the money bond case, you would like to know, would they be able to afford the repayments before you make a decision to lend? So I don't know whether you want to ask that at the outset, but it's certainly something you record during the lifetime of a customer relationship with your firm.
Thank you. Can a company adapt their standard policy and processes to be suitable for vulnerable customers, particularly if they deal with a large proportion of potentially vulnerable customers?
I think they can, and certainly they can get advice from people like ourselves, compliance consultants, who will look at your policies and procedures and help them to be prepared to deal or are suitable for vulnerable clients. And I think it's all part of a learning process. We've still got to see elements of where the regulators are going to come in and fine or enforce against firms. But like many things in the world of compliance, it's so important to have policies and procedures and to show that the policies and procedures are being used within the firm. They're not just a tick box exercise. So there's a degree of deeper thinking in organizations, recognizing that this is an area which is potentially quite new for many firms, but it's an area which obviously now needs to be addressed because the FCA put it very high on their regulatory list of priorities.
Thanks, Peter. Just a couple more here. Is COVID the reason for the FCA to now want to protect vulnerable customers?
I think it's a contributing factor, and the fact is there's probably going to be a tsunami of debt, of people going to be in a very poor financial position. The financial resilience in many is going to be affected because they've used their savings. So put that to one side. I think that's a very significant factor. But what we have seen over, I don't know, the last 20, 30 years is that people have got into debt, that people have struggled to pay back loans. There's been a large number of number of people defaulting, and the regulator does have a watching brief to make sure the markets are fair and that consumers are looked after, and retail customers in particular are looked after by firms. So I don't think COVID in its own right it's a sole factor, but it is a contributing factor to the FCA looking at the wider issue of vulnerable customers.
Realistically, how can firms design online applications to identify potential vulnerable customers? What kind of questions could be asked to support this?
As I said, we've been recently looking at an insurance application, and it's had some health questions, and it's had some questions about disposable income, and certainly working in the suitability sector, which obviously is geared to higher net worth clients who probably won't be in the vulnerable customers by virtue of being high net worth. You have asked questions about disposable income, and in a risky investment sector, what proportion of money or savings are clients prepared to lose due to the risk? So there are questions you can ask, and there are approaches which you can use, not directly, but more indirectly to find out if somebody might be vulnerable. And certainly if your client service teams or sales teams are meeting clients, they should be trained to pick up some of the issues or indicators of vulnerability.
Thanks, Peter. We've got time for a couple more questions. We have 2 or 3 more that keep coming in at the moment. Should we record perceived vulnerability or only disclosed vulnerability?
That's a very good question. I mean, perceived could be something which may or may not be an issue. So I think you really want to find out whether this is the case or not. So if somebody is bereaved and you wish to record them as vulnerable, they may be vulnerable, but on the other hand, they may be a tough cookie who's dealt with all the financial affairs before and knows their way around the financial services systems, and is anything other than vulnerable. And I had an application not so long ago from an 80 or 90-year-old for a particular service, a high-risk service. And it turned out, when I asked, is this customer vulnerable? Should we treat him as vulnerable? He was very indignant and said, no, I buy and sell properties on a regular basis. I don't want to be declared as vulnerable. So I think that's a discussion your sales and your client service teams have with customers. And perceived, I think you need to be a bit more definite than just perceived.
Thank you. Were the fines issued to Moneybarn, Lloyds and Barclays used to compensate the very vulnerable customers they failed to look after?
Well, that's a good question. Fines are one thing, but coming around those fines, there was some issues around redressing customers. So it was the tip of the iceberg, actually. Let me just go back to my slides. I think there was significant multi-million pounds fines, redress paid out by Moneybarn. I think it was, 200 million, bear with me.
It's 2.7 million from Moneybarn, Lloyds was 64 million and Barclays was 26 million.
And I think I wrote underneath how much was also paid out to customers.
That's 600 million pounds paid out in redress to affected clients.
So I was wrong, it wasn't 200, it was 600 million. So the FCA, when they come in and they fine you, they're also expecting you to address the wider group of clients who've been similarly affected.
Thank you. I think I can answer this next question. Do you have any examples or templates for vulnerable customers' policies and procedures, i.e. what does good look like? At ComplyPort, yes, we do. And to the person who asked that question, I will drop you an email to have a conversation about that. For anyone else who is interested, I have also put my email address into the chat function of this webinar, so you can copy and paste into an email if you want. Looks like all the questions we've had today. So I'd like to let everyone know that the webinar, that ComplyPort can assist firms with their vulnerable customers framework by providing a vulnerable customer gap analysis. As part of this service, we would look at your policies and procedures to ensure that your firm understands what a vulnerable customer looks like, as well as the practical steps that need to be taken once they are identified. We can review your staff's capabilities and skills when it comes to vulnerable customers and highlight any knowledge or skill gaps that may exist. Finally, we can help implement a persistent monitoring and evaluation process to make sure you continue to meet and exceed the FCA's expectations. Again, if you're interested in discussing that gap analysis, please send me an email, which I put into the chat function of this webinar. I'd like to thank all the attendees on today's webinar for joining us and for this interesting discussion and for all the questions that were posed at the end. Peter, thank you very much for giving us your time today as well. I'd like to thank our partners at LGCA for helping to promote this event. This webinar has been recorded and we're putting the recording online soon, and we will also be emailing the slides to all those who attended today. For future webinars, please follow ComplyPort and LGCA on LinkedIn to see when they become available to watch, as well as when you can sign up to them. Thank you and have a very good day.